Video about the overall trading process and kind of what I look at when I get to the screen. For the sake of this video, I pretty much cleared Euro completely, so there's not a million supplies and demands, and we can see what's going on. Um, so basically, my analysis starts from the top down. I start on the daily, and I can identify a couple of things right now. We have a weak low here that's going to get run at some point. This low is weak as it failed to put in a new high. It did not take out this high, so at some point this low is getting run. We can assume that. Don't mind my dog. But oh, anyway, what else we have here is a daily demand that hasn't been mitigated. Um, we can all agree that we're heavily bearish, and we can all agree that we've had next to no retracement. As we come into the daily demand, we can expect some sort of retracement. So then we're going to go fine tune on the 4 hour and see what happened. So on the 4 hour, I pulled one demand and two supplies. The demand I pulled is refined inside the daily zone, and what it would be is these bottom wicks to these top wicks would be your daily order block. We just refined this to the 4 hour demand as we are on 4 hour. Again, we are heavily bearish. Now I want to just talk about a couple of things that's going on. So if we look at this high here put in a new low, and this is a new low, this candle wick technically, but these bodies here close below these wicks, meaning that this is our new low. So this high is relatively strong or protected to some degree, or at least so we can assume. Now, if we look at this supply zone here, what we can note is this supply took a drive into price and completely failed. We did not get a body close below this wick. In fact, we rejected numerous times. So it would be safe to say that we're going to get some sort of retracement. And at the bare minimum, this 4 hour high should get run as it's weak. It didn't do its job. Whereas this one would be protected to some extent. So we'll talk about that in a little bit too. And the only thing I have against this high here is if you look at this wick here, all the liquidity has been swept to the left, and this wick came and grabbed the rest of it, which means there's no inducement here. So even though this is a strong supply, with no inducement, they don't hold up. So chances are this will get some kind of tap, retracement, and it should get run as well. But this one definitely needs to go as it's weak. But we'll save inducement for another video as it's a video completely on its own. Um, and we're going to go to our 15 analysis. Now, what we had here was you could have said this was your low, this was your high. We came down, we took out this low. So this to me becomes structure. This would be your pullback, and this would be structure technically. And you could say you're kind of bullish here. Not the greatest structure, but it's structure. And what we're working with right now is this is your high point and this is your lowest point. The reason this low point is structure is, again, we took this out. And so to me right now, unless we get a body close below this wick, oh man. But yeah, unless we get a body close below this wick, we don't get a new low. Unless we get a body close above this wick, we don't get a new high. Everything in here is substructure. It is not structure of any sort. We don't look at it as anything else as substructure. And the first thing we can note is this high would be relatively weak as it drove into price and it ultimately did not take this low out. Yes, it took that out, but we did not take this out. So ultimately, we didn't make a lower low. Price came up, reacted off this supply, came down. Again, we did not make a new low. So we can assume both of these highs are now weak. So we can start now building a narrative for why price should go up. Now, if we look from here, the first thing you can notice is we had a sort of a supply that tried to drive price deeper, and ultimately all we got was a mitigation off this. And obviously, demand's holding. You could say demand is in control. Now, we are bearish, 100%, but we are expecting some sort of a pullback. And being that demand's in control, I'm quite comfortable with trying to go up as we've had no retracement. So this is where you gotta put your structure together, but also look at your higher time narrative and what's weak and what's not. So if we just look at this right now, I would probably say we should pull this as some sort of demand as price started here. And the next thing we can say is, well, actually just 15. I don't know why I have 5 minute on there. I don't use 5 minute for anything. Anyway, again, we can say this is some sort of demand as well. You have a little bit of inducement above it. So ultimately, if we play price, what time does Frankfurt open here? 7. So we'll go a little more. And is that Frankfurt now? So we have another demand here as well. You never really know where you're going to react, so it's good to pull them all. And from here on, we can just go to the 1 minute and we can refine. So on the 1 minute side of things, we can see that we reacted to supply here. Where is it? So we'll call that supply. Supply does get run here. Thing I don't like about this is I would personally like to see one of these areas get mitigated, and that's just my personal preference. You can again look at your pricing however you want, but we want the best deal possible. Well, let's try that again. PD. Perfect. So it'd be nice to get something in the discount range. So we're gonna just stay out of that one altogether, and we'll just see what happens. Okay, so price comes through there. Um, this is again, you just have to be smart. If you going back to our 15 minute, you guys seen us pull the fib. I've made a video on premium and discount pricing and the relationship with supply and demand, and that right there saved us a loss, as this was just too highly priced. Anyway, what we could say now is I am comfortable taking a buy off this. I am comfortable taking a buy off the bottom demand. So again, you could say this is some sort of supply, your last 1 minute supply. Now, this is kind of a weird one. So you didn't get much of a reaction. I like to see a reaction point. So when you don't get a reaction point, one of two things will happen. An order can get grabbed right off this wick here, or we can come for the extreme. So we have two areas of interest, and depending what your risk tolerance is, you may just take the extreme, or you can be proactive and put an order on both. As we get such good risk reward, we don't really care if we take a loss or two. I put two orders on positions all the time just in case it does come to the extreme. GU and GJ, they like the extremes. EU, I find, doesn't always like the extremes. It's kind of lazy. So what we could say here is we're going to put an order on this wick and we're going to put an order in down here. Um, you would probably want to be smart and cover your low here if it did come down here. It's totally up to you. And so we could say we got tapped into that and we're on our way. So now, if we go back to our 15-minute, where do we want to take this? Well, I should have actually had this pulled. Uh, so we have a couple areas of interest. Um, the first is this 15 supply, which in all honesty, guys, because we didn't actually become bullish till we took this high. So myself, I would have took partials at this supply, and I probably would have left a runner on to look for that 4 hour supply that we have marked. You're hitting a 4 hour level, you can expect some sort of retracement. Now we can say that as long as we are now unconfirmed bullish. So as long as this low stays intact, we are bullish and price can come down as low as it wants to. As long as it doesn't take that low, I'm gonna remain bullish. That is our lowest point before the highest point. None of this is structure. This is all substructure. And it can be used to formulate trades, 100%, but just do not confuse it for structure. So if we go back to the 1 minute, so we could say, where is, I believe that's the long there. So we had one trade there. And then, anyway, so just a trade to that supply would have been, we would have been a bit tighter than that. But just a trade to that supply is almost 7R. I would have probably, took some partials here. However you want to manage, that's completely up to you. And then you leave a runner on to see if you reach the next supply. So if you're smart, you'll probably partial out, at least 50% here. And then you leave a runner on and you leave the rest on. And the very top of that OB ends up being 13R. So let's say you partialed out 50%. So you got an additional 6R on that. So that trade's done. Um, so that made us bullish. Unless we get a choch and a flip off that 4 hour, we're not interested in just taking a random sell. So how you guys manage and how you do that's completely up to you. But me, I want to see a choch and a flip, and that gives us the highest probability of success. So now we can see price does what it wants. So ultimately, this is your supply or demand, I should say. You came right through it. Price doesn't appear to want to revisit it. Would I take a trade off this or this? Absolutely not. We're going to wait for a 15 POI to get hit. And again, we'll look at how price reacts and try to formulate a trade. So we came, let's just look at the 15 quick. So we came to our demand down here, and this demand obviously didn't need to get respected again as it's been mitigated. So the logical thing to do is go for the next demand, as you have inducement here and you have inducement here. So now if we're looking at our 15 again, we could say we're going to pick a target. Now, going back to our narrative, as long as this low stays intact, we should stay bullish. Just looking at this with some logic, we have inducement, demand's in control. Yes, you came through demand, but why did you come through the demand? We came through the demand to mitigate it, to mitigate the last area that's not mitigated, grab our inducement. So what is our next target? Our next target at a bare minimum is these highs. This high did not take this low. So we can say this high is now weak and becomes a target. And to me, Obviously, this low would be protected and this demand should be protected to some extent. And this is again never 100%, obviously. These are just things that help us build a narrative. So again, we play price. So you could say you have kind of a bit of a, so you have a bit of a supply here. It's not the greatest supply, but it's supply. It is. And we didn't get much of a reaction. So that's totally fine. And that again will happen to you. So this is another one of those things too. You will have multiple areas you can get in, and how you want to manage is totally up to you. So, and where you want to get in is totally up to you. So you have an area here. This is a form of a demand. This demand ultimately caused this to fail. So it's definitely an area of interest. I don't have a problem taking a trade off that. We do have another area here. If you're smart, you'll probably cover that low wick. Completely up to you. And like I said, I don't have a problem tossing an order on both of those. To me, that high is weak and needs to go. It should go from A or B, and we don't mind taking a loss. So we take a loss on the first one, which is totally fine. On your second one here, now if you're smart, you'll probably cover that wick. If you're a little riskier, you might not. That's totally up to you. Um, I'll probably not cover that wick because that's just me. Man, this garbage can really likes popping up. So, depending how you manage and how much risk you take, this is another one of those things you could throw two positions on, and I don't have a problem with throwing two positions on this either. I still think we're going to go up. So I'd throw one position on like that. Are you fucking kidding me? Okay. So I'd throw one position on like that, and then I'd throw one more on position just like this, but cover the low wick. The reason I would take one that's a little bit tighter is to get better risk reward. If you're only risking half a percent or a quarter of a percent, depending how you manage. So we would have lost a quarter percent on this trade. That's fine. I'll throw another 2/4% orders on this. And let's just go ahead and actually throw it on just for good measures. And I'll show you guys why I take two. And depending on the OB size, so this one being 2.4 pips, yeah, you can take part of it, you can take all of it. I used to take just 25%. Now, if they're under 3 pips, a lot of times I'll take the whole thing. I've found myself missing a lot of trades. So this is a 4.6 pip stop, which is absolutely atrocious for Euro. It's pretty near a deal breaker, but we'll take it. Anyway, so we made some money on this trade. We're already up on the day. I don't mind taking a hit on this. Sometimes these go, sometimes it comes to the extreme, and in all honesty, this is inducement for it. It's one of those things, and I'm totally fine with that. So we'll play price, and what we can expect is price to go up, and should take that high. So on the management side of things, I don't know how you guys manage. I know some people break even, some people trail stop losses. Myself, when my trade hits 1 to 4R, I sell 20% of my, I sell off 20% of my position, and I keep my stops open. I used to go break even, and a lot of times it would come and take me out and run to target. So that's how I manage risk. How you want to manage risk is completely up to you. So again, and we should get, actually, what is this? So we're probably heading to New York. Um, Again, so if we look at this now, you have a couple more areas of interest that haven't been mitigated as price just took off. So again, We have sell the buy wicks. I'm a huge fan of wicks. In case you guys haven't noticed, wicks are a good clue to a BFI footprint, meaning banks had something to do with that price action, as they're the only ones that can move price aggressively enough to create wicks. Because on a pair like Euro USD, it takes a lot of cash to move price. So we know it's a big bank or a big financial institution or a group of them, as retail traders obviously don't move the markets whatsoever. So we could say these two sell the buy wicks are kind of our POIs. As we're heading to New York, so this is London time. From 1300 to 1700 is prime time for London. That's what I trade, or New York, I should say. So yeah, 1300 London to 1700 London time is the prime time to trade New York. Depending how good trading went, a lot of times I'll end trading at 16. The goal is to be at the charts for 3 hours a day. I don't trade London, obviously. I sleep during that time. But for those of you that do, you don't need to be at the charts all day. And the goal of this is to not be at the charts all day. So let's go back down to the 1 minute. So our stuff hasn't hit target yet, and we're totally fine as we're still planning on running those highs. And we can play price and see what happens. So, so this is dead volume right now, and we tapped in. You did get a reaction there, so you could say this is some sort of supply here. Um, let's see, supply. So you could say there's some sort of supply here. You could take an order. Well, this one kind of didn't really give us a reaction point either, but you have an area here and an area here. Again, depending how you manage, you could put an order on extreme. You could put two orders on, as price can run from here and price can ultimately go down lower. We don't know. We just work with what we're given. So price, so that ran right through us. So we lost another 0.25%, and I'm totally fine on that. At this point, I'd like to see that bottom area mitigated. And we got a very strong reaction, very bullish. And that's totally fine. And we have another sort of supply here. So if we play price, get kind of a reaction, and you have two choices here. You actually have two supplies. So you have two choices here too. Being how we are bullish, I don't have a problem with, and when I say bullish, I mean we have not taken this low. We made a last high. We're still bullish, so I don't have a problem with continue on buying. And the way I would do it here is I would map this. We didn't have any sort of reaction. There was no exchange between, there was zero exchange between buyers and sellers. So they came right through it. They're going to come to the extreme. I'll toss another order on that. As we are bullish, why not? So, where's my thing? So you can toss an order on that. And the next thing we're going to pay attention to is what kind of reaction we get here, which you could almost argue that that's your reaction point too. So we have an order there, and it should run that high at a minimum too. So we'll play price. Okay, so now this is another one of those things. So this is your reaction point here, I would say. And I would say the area that took out your reaction point came from something in here. So depending how you trade, you would probably throw an order on something in that area, as we're always looking for these wicks. And you could throw an order in on the extreme. Since how we already have an order on the extreme, I don't need to throw another order down there because we're already in that. So myself, how big is that? So that's about a pip and a half. That's not bad. Um, and depending on your broker too, you might have to front run your position, put your order here, cover a little more, whatever. It's not the end of the world. Um, I'll make another video another time, show you guys how to get tighter, way tighter stops on the seconds, but most people don't have the broker to do it. I use Fusion Markets and they have good spread, but a lot of brokers don't even give you the spread you need to use that properly. So there's your top and off to the moon. So you got a 5.62R here, you got a 9.7R here. If we look back on our London positions, you have another 9R here, another 6R here. So what is that? That's like 9, 6. So you're about almost 16R here. You got 9.7, so you're another, what is it, 25, almost 26. You're 31R between four trades, and like, yeah, you partialed out and you took whatever, a couple losses, which is totally fine. And oh yeah, you also made money here. So I don't even remember what we made on those, but you could definitely say you're up on the day and you're not too worried about it. Um, so we didn't run that 4 hour high, and that's totally fine. So this is, and you could definitely leave some on as we expect this 4 hour high to go. Myself, I will go back to this, and one thing I want to note is we have an unmitigated demand here, and they always get met. You just don't know when. Somebody will come mitigate them at some point, and 15 demand. Well, horrible demand drawing, but you guys get the point. So those are kind of our trades, but just out of curiosity, let's see if we do end up running that 4 hour high. I'd have no problem ending my day after anything over 5 hour, 10 hour. So, one thing to note too is when shit like this forms, a lot of times it gets run too, as we're expecting this to get run. So let's just see what happens. And so we came and mitigated that point, the demand. Um, Demand's in control again, supply lost control here. I can probably find an entry on the 1 minute here in these two wicks. And we're not going to do that, but let's just assume I do. And there goes your 4 hour high. So if we go to the 4 hour now, your week 4 hour high is gone, and we can probably expect some sort of retracement, and price should continue on going bullish now as we're in bullish order flow, and this 4 hour demand should now hold. So if you play price on 4 hour, we came very deep into this demand and we ran the next high. This high we didn't expect to stay intact because it's got no inducement. Everything's been swept. So I hope that kind of makes sense, guys. That is literally the same setup I look for over and over on every pair. And if I don't get that setup, that's fine. There will be times where you're on the wrong side of the market, and that's just the nature of trading. You are going to take losses, you are going to miss trades, you are going to get wicked out. I had two orders miss me by like zero point 0.2 of a pip today. It was very annoying, but it happens. I've had orders, I think yesterday, the day before, that literally wicked me out by zero point 0.1 of a pip and run to target. It happens. That's life. But if you manage correctly and you're only looking for setups off the 15 minute, and you built a narrative off the 15 minute and the 4 hour together, then you should have an idea of where price is heading and what you want it to run. And for those of you that do trade euro, um, this week low, I talked about it for like a month. I don't know if you guys follow me on Instagram or not, but I've been talking about this low getting run for like a month or two, and they finally did come run it. Again, it's the week daily low. It needs to go as it did not take this high. And ultimately, we're always just looking for strong points and weak points and trying to create a story of why we should run it and where we could run it from and where are we getting the pools of liquidity and inducement to do so. And yeah, order blocks need liquidity and inducement to stay intact. If they don't have it, they go, which is a prime example of what happened here. And this one couldn't stay intact. So yeah, I hope you guys enjoyed that. I hope that made some sense. I tried to keep it as simple as I could. Yeah, have a good day.